Why is Reliance Retail downsizing? Last week, Bloomberg reported that the Ambanis are overhauling their retail business in an attempt to assuage investors who are looking for an exit option in the form of a public listing. Slowing sales is a concern for the company after brokers pegged its valuation as low as $50 billion. That's about half the amount at which it last raised funds about 2 years ago. Now, this was apparently acknowledged to investors in recent discussions. It was also acknowledged that the company had grown too big too quickly as a result of expanding across formats and geographies, according to people who spoke to Bloomberg. Reliance Retail operates through a structure of about 60 units that include mass market and luxury superstores, beauty and clothes, apps, and quick grocery delivery platform JioMart. The current focus, according to Bloomberg, which is also actually quite visible now, is to limit physical store expansion, cut back on marketing budgets, and merge Reliance brands with the umbrella retail entity and review some global brand partnerships. Hiring has also slowed down. Funds like Qatar Investment Authority and General Atlantic had invested about $8.2 billion between 2020 and 23 for a roughly 12% stake in the firm, according to an analysis by Stanford C. Bernstein, quoted by Bloomberg. Reliance Retail did about 273,000 crores of revenue and about 11,000 crores in profits for the year ended March 24. It had about 340 million customers at that time, around 19,000 stores and 4 apps. I reached out to consumer and retail analyst Karan Taurani and senior vice president at Elara Securities, and I began by asking him what the slowdown or the pullback by Reliance Retail actually reflected.
The situation is quite mixed right now. Two things are happening. One is, in terms of the consumption and the spending, it's a mixed bag as far as urban market is concerned. Whatever expansion we have seen beyond the urban markets, things haven't picked up as compared to what one would have estimated. That's the first thing. Second is that the competitive intensity is growing in itself in every category, every segment. And the third thing is the disruption from online, right? So the online business is kind of doing very well. Quick commerce is catering into multiple categories, including FMCG, grocery, even, some bit of apparel to a smaller extent, and other categories like wellness and, beauty, personal care put together. So there are concerns as far as retail business is concerned, and Reliance, as we all know, they're a large player with more than 19,000 stores which are present. And, in these kind of times where things are uncertain, they will have to kind of curtail their investments. Also, one interesting point, if you look at, is that Reliance is not able to scale up on their online business. So their online revenue contribution remains to be in the range of 17 to 18%. And that's been constant since the last, 8 to 10 quarters. Obviously, it's a very large scale in terms of the way they operate, and the revenue size is very large. But they haven't been able to scale up on their online revenue contribution as well.
I have a couple of questions. So let me start with the online part. Now, this is a 300,000 crore plus company with over 10,000 crores of profits. So if they wanted to, they could discount their way through all the quick commerce players in the market, couldn't they?
See, quick commerce is not a game of discounting, firstly. So, there could be many players who could come into the quick commerce market and just, give discounts and try and make business sense out of it. But that's not the case. I think quick commerce is a game of technology. It's a game of assortment. It's a game of convenience. It's a game of user experience in terms of knowing your customer, knowing your, local markets put together. That is why I think, e-commerce also, as of now, we feel that has a low likelihood of getting success into quick commerce, because quick commerce does a very deep dive in terms of every market, and that's not possible for every company to do it. So just capital, just pure discounting is not something which will give a moat to a quick commerce company. So I think Reliance obviously has tried digital businesses. They've tried JioMart with 30 minutes delivery, all those kind of new things, but none of them have been able to, match up to the quick commerce experience.
Got it. So let me come back to the large stores, and they have obviously thousands of stores. And what's your sense on what is worked for them versus what has not at this point?
So I think what works for them is the scale, the size that they operate, the kind of wide variety of categories that they have. They have got a very large presence in terms of the online fashion market. Ajio is kind of a market leader as far as online fashion is concerned. So these are certain things, which have probably worked in their favor. I think what's not worked is the offline business, I would say, on both on the grocery side, even on the apparel side. So I think these are some problems which Reliance faces. Offline businesses are not able to grow beyond a certain point. They made entry into multiple segments, the white goods segment, the jewelry segment, but the competitive intensity is very high in all these segments. Right? Despite whatever efforts that they've been doing in terms of store expansion, they're not able to kind of do well ahead of peers.
But is the market somewhere capped and are people maybe not accepting it? So at 19,000 stores, is there really potential at this point of time in this country to grow for a retail brand?
So there is potential, no doubt about it. But right now, as I said, the market is quite competitive. You are seeing online brands or other online first brands becoming offline, becoming omni-channel, right? Second, you are seeing a very big threat in terms of online adoption, be it via quick commerce, be it via e-commerce. So these are two things, which are kind of hampering the growth rate as far as offline retail is concerned in the near term. And I think that is why the expansion will be a bit slow.
So if you were to aggregate all the quick commerce companies in these categories, let's say consumer goods, daily consumer goods, and so on, which is where they operate more in, and compare them to the large retailers, what would the split be? Wouldn't it be in the 10% or so, or even less?
So quick commerce is very small. If you look at the quick commerce market, it is not even 5% of India's e-commerce market. And in terms of overall retail as a category, it will be, less than 1%. Like FMCG, take for example, which is the largest category on quick commerce. Less than 1% of sales on overall basis comes from quick commerce. But the point I'm trying to make is that it's not only about quick commerce, it's also about e-commerce. Because e-commerce is reasonably penetrated. White goods as a category is seeing very strong offtake as far as e-commerce is concerned. And that is where I think, Reliance needs to scale up. Okay. And there are many other categories like apparel, could be beauty, personal care, wherein they launched Tira, but they were not able to scale up beyond the point. So multiple category, multiple formats, they need to really do well, execute well. Only then you can see results.
So they are for present in brand partnerships and a lot of global brands like they've brought to India. Now they could be Japanese brands, they could be British brands. Now, what's your sense? I mean, where is the real value then between, let's say, the high-end partnerships, their own store brands, and at least if you were to look at how things have been in the last few years?
Yeah, I think the luxury market is obviously growing very well. We have seen adoption of luxury goods because of increased number of customers, moving up the grade in terms of income levels, wanting to spend on high end, wanting to spend on luxury. But as I said, the growth rates probably is growing at 25-30%. Luxury market is doing very well. But that's a fraction of the overall, retail pie. So one can't really piggyback on luxury as a segment and, kind of make sure that the Reliance Retail company grows at 10-15% kind of growth rates. So I think luxury will continue to do well for Reliance because they have a wide variety of partnerships, as you said, in terms of global brands. But one can't piggyback on that as a big growth lever for the overall business.
So if you were to look ahead now, and to the extent that Reliance is also, its numbers represent the state of the economy, at least as far as consumer demand goes, how are you seeing things?
So I think in terms of consumer demand, as I said, I think we'll have to wait till the festive season because I think this Q4 is not going to be anything great. If you look at Q1 as well, things are going to be quite mixed across various categories. I think we need to wait in terms of what is the future of the digital channels. Where does the quick commerce category go? Whether they can scale up beyond the metro markets, whether they can move from other categories except from FMCG. What about e-commerce? Are they reasonably penetrated? Can they deep dive further in terms of newer markets? Can they grow at a faster pace? What kind of share they can have? So I think for the next 6 to 9 months, there are two concerns. As I said, one is the digital businesses doing phenomenally well because of increased adoption. And second is the offline channel also struggling. And I think this is going to be a near-term risk for all the retail companies.
So in that sense, you're saying that the retail sector is not really looking as exciting as it maybe perhaps did in the 2021-22 phase or period.
Yes, absolutely. Because I think when 2021-22, we saw a revenge consumption situation wherein consumers actually came offline in large numbers. Footfalls had seen strong growth, which led to store expansion as well. We had seen the biggest highest amount of store additions in that period. And a lot of the landlords were also considering a lot of discounts that time around. People moved to rev share as well in some of the deals. But I don't see those things sustaining now. We don't see, revenge consumption in terms of footfalls. We don't see, discounts, coming from the landlord side as well. Economics of stores are being tested right now. Some stores are being shut down because of losses. So a lot of things to monitor in the near term.
Karan, thank you so much for joining me.
Thank you, Govind, as always.